You are listening to episode 44 of the EU Startups podcast. Today's guest is Jeff Kelisky, the CEO of Seedrs, which is Europe's leading private investment platform. Hello everyone and welcome back to another episode of the EU Startups podcast. And before we jump into the interview with today's guest, I'm excited to introduce our podcast sponsor. This episode of the EU Startups podcast is brought to you by Vanta, helping you scale security practices and automate compliance for the industry's most sought-after standards. To close and grow major customers, you have to demonstrate trust. But providing your security and compliance can be time-consuming, tedious and expensive, especially for startups, unless you use Vanta. Vanta automates up to 90% of the work for the most sought-after compliance standards like SOC 2 and ISO 27001 and gets you audit-ready in weeks instead of months. With Vanta, you get up to 400 hours of your time back and reach up to 85% in cost savings. And for a limited time, EU Startups listeners get $1,000 off Vanta. Just go to vanta.com/EU Startups without a dash to get started. Today I'm excited to interview Seedrs CEO Jeff Kelisky. Founded in 2012 and headquartered in London, Seedrs today is Europe's leading private investment platform. Over 2 billion euros have already been invested through the platform, and most recently, Seedrs also became licensed under the new EU regulation for equity crowdfunding providers. Jeff, thank you so much for taking the time and welcome to the EU Startups podcast.
Thank you, Thomas. Really happy to be here. Look forward to talking about it.
Awesome. So for those who are not familiar with Seedrs yet, can you give us a short backstory on how Seedrs got started, how it evolved over the years, and what the platform is offering today for startups and investors?
Sure. Like many startups, its journey began very simply an MBA paper by two founders, Jeff Lynn, Carlos Silva, which were looking at the growth of peer-to-peer lending. And at the same time looking at a very fragmented but large investment ecosystem around private companies not fully being satisfied, not being open to retail investors, and that really led to the genesis of Seedrs back in I think it was 2009 when the paper was written, 2011 when we went live. First regulated crowdfunding platform in the world, thanks to actually what was a very progressive regulatory team, actually in what was then the FSA, now the FCA, in trying to encourage more innovation and investment in the private ecosystem. And so we found ourselves in a very unique situation where often startups in any industry segment often start in the US or in Silicon Valley and eventually make their way here. Actually, crowdfunding really started here and was much more advanced compared to almost any other market, and still is in some regards as other jurisdictions began to come online. The US eventually opened it up, and actually the subject we're talking about today is Europe now coming online as well with a regulatory regime to allow us to serve Europe as an entire region. So, Seedrs, started the world in trying to democratize access to for investors into private deals and deals that they wouldn't otherwise have been able to see, and certainly for the founders, for entrepreneurs, to have a more, I guess, fair playing field in trying to get access to capital to grow their businesses. So we went from maybe a small number of deals back in 2011, 2012 per year to upwards of 250. In fact, the year before last, about 300 deals were funded through the platform. So, a much more mature ecosystem now developed around us, and now trying to take that into Europe. So, companies like Revolut, which I think most of your readers will know, we were very excited to serve a few years ago. It's quite scary to think that they were valued at 300 million when they raised with us. Now, sort of 52x later, their valuation has skyrocketed. So great success there. Also, it was a great success for them to reach their customers and turn them into investors. And most recently, we funded some interesting organizations like Green Lithium, which is a very different type of organization in terms of mining and the importance of electric vehicles and clean energy. And they were a huge success this year, raising several million. So a real spread in this journey from stark beginnings to now a proper player in the venture capital ecosystem.
Exciting. Okay, so also already some unicorns here in the portfolio. Very good. And then eventually, at the end of 2021, Seedrs got acquired by Republic. How did this impact the Seedrs business and the platform so far? And what are the synergies that evolved from that?
Sure. I mean, it was an interesting time because I think, as I mentioned earlier, the evolution of crowdfunding was, and certainly our strategy was different here and for Republic in the US. And in some ways, they've come together to ideally to kind of get 1 + 1 = 3. But I think our approach as Seedrs was very much about broadening our proposition to serve the entire equity ecosystem, which is why we were the first to launch a secondary market in 2017, building out a funds capability in 2018, and expanding on that. So we really expanded in terms of equity. Republic took a slightly different approach. Republic, particularly, as necessity is the mother of invention, because the regulatory framework in the US was much more difficult. Actually, Ken, as the founder of Republic, expanded not within equity, but actually beyond equity. So he actually stepped into crypto and built a crypto division and set up a venture capital division almost in a traditional sense, because that was doing very well. And so, by the time the two of us came together in a conversation in 2020, we had expanded our capabilities in different directions ourselves, primary, secondary, and kind of the whole end-to-end ecosystem of fundraising, whereas they had gone into other asset classes. And so the combination, as we talked about it in 2020, was not only product breadth, so actually opening out to not just being an investment platform in equity, but to almost being an investment platform in private assets, of many types, and to do so globally. So as we think about our expansion now, it is very much about bringing some of the capabilities that we built in broadening and within the equity landscape into the US. So actually, the Seedrs engineering team built the US secondary market, which launched last year within Republic, something which is just beginning there. And we are now looking at bringing some of the Web3 capabilities that Republic have been working on, like a wallet and staking capability and tokenizing assets, into Europe. And so in many ways, we're implanting each other's capability sets in our separate markets, whilst at the same time sort of integrating our two platforms to create a sort of unified investor experience. So as an investor, ideally, over time, as we bring these two businesses and platforms together, as an investor, you can go to one place and look at different asset classes in different jurisdictions and become educated about them to make investments that you otherwise would never have access to.
Makes sense. As mentioned in the intro, Seedrs was recently licensed under new regulation for equity crowdfunders to operate in Sweden, Denmark, Spain, and the Netherlands. How is this new industry regulation going to change equity crowdfunding in Europe, and also for Seedrs in more specific terms?
Yeah, it's quite an exciting time for us. I think the European regulatory framework is something that Jeff Lynn, who I mentioned earlier, was actually on our minds for many years, and we were in discussion with the regulators in Brussels for about 4 to 5 years before it was finally passed as legislation. Mm-hmm. And so there's a lot of the learnings that we had over several years in the UK that then got baked into that regulatory framework. So it's in a pretty good state and not vastly different from the way we've worked in the UK. And I think one of the fundamental differences here is up until that point, if you wanted to deliver any crowdfunding, you had to be regulated in a market by market. Mm-hmm. Each one slightly different, each one with different rules in play to either protect investors or serve founders. Some very difficult. And what this did is create a unified framework across all EU member states. And so, I mean, you mentioned, for example, Sweden, Denmark, Spain, the Netherlands, which is where we are starting. But mm-hmm. this regulatory regime allows us to operate across all of the EU, and we will sort of sequence our opening in Europe, country by country, but we can do so with one regulatory framework, one platform, one set of rules, and really therefore give access to founders in each of those countries to investors, again, across Europe, mm-hmm. in the UK, and vice versa, open up the door to investors in each of those jurisdictions, to founders, to businesses in other locations, whether mm-hmm. it's a Spanish investor in a Dutch business or vice versa. And one of the keys here is really about the ability to market financial promotions mm-hmm. in a standard and secure way. So that way, from a compliance perspective, investors know that we are complying with the regulation, regardless of which jurisdiction they're in. And one of the most powerful parts of our proposition is to help those businesses, those founders, reach a very broad audience, because that very mm-hmm. broad audience is not just an audience of investors to bring capital, but is also an audience to hopefully acquire customers, to tell their story, to become ambassadors of their brand. Mm-hmm. And all of those things we can do to a much greater extent now that this regulation is in place.
Mm-hmm. Awesome. Yeah, let me get this straight also for our audience who's maybe not so much into that topic. So just to clarify, technically, it was also already possible before, let's say for a German investor to invest in a UK-based startup, or a Spanish investor to invest in a German startup if it got listed on Seedrs. But with this new licensing, basically the way this investment opportunity can be marketed and can be communicated is much more clear and much more doable in a compliant way.
That's exactly right.
Okay.
We can exactly right. We can now allow a founder to broad scale send a message, knowing that they're being compliant with mm-hmm. With the law, whereas before they could only be discovered really by accident rather than a full marketing campaign.
Mm-hmm. Cool. So this sounds to be very good news then for startups who are planning to raise cross-border in Europe. So that sounds like an exciting opportunity. Do you expect the number of European deals on Seedrs to go up because of that in the near future, or what are your plans and hopes there?
Well, absolutely. I think for a number of reasons, obviously because of the work we've now done to be regulated, we are increasing the size of our sales and marketing teams to be able to serve Europe now that we have a proposition that can do exactly what we just talked about to really sell that message of those businesses at scale. But there's really an important evolution that we're seeing at a much larger scale. And if I kind of talk about this almost as an economic story. So, I think, the whole ecosystem around founders in having access to capital, for example, was much more mature in the US, certainly on the West Coast, before it was so, here in the UK and then in Europe. And actually, from a maturity standpoint, and by maturity I mean, access to actual investors, but then you have a sort of ecosystem that builds out around that, whether it's accelerators, or different, studios or consultants or advisors. So that sort of ecosystem that supports founders, so that actually people coming into it are already well educated. It is not surprising, for example, that, going from, zero to, access to investors and knowing how to put a pitch deck together and the legal agreements that support that is a very well understood thing, for example, in the US and now here. Whereas as you go into Europe and then Eastern Europe and beyond, there's less immediate access to, people who understand, who've done it before, you talk to your neighbor. And so this legislation, this is all part of the maturation, the evolving of, an entire, entire continent in terms of the access to and education of how to take a business from kind of 0 to 1 and then 1 to 100. And so the speed at which you move and the knowledge and understanding that founders have, this is all part of accelerating that. And so we will play a role in, we hope to play a much bigger role now with this regulation and with our opening up into the European market, into the maturation of that ecosystem, where we can play not only a role from a functional perspective of, hey, let me help you as an investor, get access to these deals, or as a founder, tell your story to a broader audience, but actually to educate, to provide a content platform where, almost as an academy would, in terms of giving people access to information, tools that they might have to do their own research. And so, all of this plays an important role in raising the standard, the knowledge of the ecosystem more broadly. And so we really see ourselves playing a much bigger role, not just as a almost a utility, but certainly as a source of knowledge and education and content for that broader market to help accelerate the ecosystem of innovation that exists. And you talk about the times being difficult in terms of the current economic landscape. One thing that's been true through each of the difficult periods that we've gone through, actually, difficult times, economic hardship is fertile soil for entrepreneurs. Entrepreneurs are born in difficult times. And so actually the creation of ideas, the development of businesses on the back of entrepreneurs' belief in something usually accelerates during these periods.
Yeah.
And so in many ways, the access to entrepreneurs is only increasing. What we're trying to do now is give them a better proposition. On the investor side, you're right. I think where there's difficulties, maybe less on the retail side, but certainly what slows things down is institutions are doing a couple of things now as a result of these difficult times. Certainly, they're a little bit more choosy in terms of being more discerning on the businesses that they're prepared to invest in. The process to get to yes takes longer, as they really want to make sure, and the valuations are lower than they were before. And so entrepreneurs are often working on their own kind of friends and family for longer, to make sure that they get as much as far as they can before they then kind of step into the broader space. And so we are seeing at the institutional end a little bit more of that reservation, but retail has still tended to follow well when those bigger check sizes come in. So I would absolutely expect to see material growth in Europe. We're beginning to have some good conversations now. The events that we attend, like Slush, Web Summit in Lisbon, are all demonstrating a growing appetite to come out of what's been this economic recessionary period.
Okay, so there's light at the end of the tunnel. That's
Most
good
certainly.
to hear. Okay, and yeah, maybe this is also a chance for equity crowdfunding to shine in this period of time, right? While the big VC firms are still very hesitant, I think many private individuals are maybe a bit more prepared to make some investments at this time. So how do you think equity crowdfunding, maybe this is a final question from my side, how do you see equity crowdfunding as a funding source, as an investment category to perform over the next years compared to direct traditional VC investments, compared to business angel investments that are not done through an equity crowdfunding platform? Like, where do you see equity crowdfunding in that mix? Do you think it will continue to gain momentum, or do you think it already reached kind of its height and will from now on continue to grow and develop with the overall venture capital ecosystem? What are your thoughts on that?
Sure, it's a great question because it really touches on the evolution of the ecosystem of players, which have been very sticky over a long period of time and what I mean by sticky in terms of the fragmentation that exists. So two things, very simply. I expect the market to get larger and for, if you like, platform-based investing, of which we are, sit right in the heart of that. And equity crowdfunding is really one part of what our platform will eventually be capable of. But platform-based investing will increase its percentage of overall private. So private investing is a multi-trillion-dollar space globally, right? It's a very large market, and there's a number of forces, many of which I'm sure you've talked about in other podcasts, which are really around, more money is moving from public to private. There's a lot of there's growth in private companies, even in difficult times, and private companies are staying private longer. So you have these very heavy secular trends around private being a dominant place, which has been more quiet in these last few years for all the reasons we just talked about. But the fragmentation, which certainly exists, and I'm not suggesting that goes away. VCs will continue to exist. They play a critical role. So do private equity at the high end. So do angels and syndicates at the lower end. But a platform which can really kind of create this fair playing field and open the market to audiences that otherwise do not play. I mean, it is. I certainly don't know about you, but whether we look at statistically kind of the research that's been done, or anecdotally, when you go to a cocktail party and you talk about what you do, crowdfunding and investing in private is still not a well understood space. People still, unless you're an investor, don't actively participate in it because it's not open. It's not easy to access. Yeah. So that we're really still playing, Thomas. We're still playing in a very small percentage of kind of retail private investment. And so in that sense, there's a lot that's yet to be tapped. So I would absolutely expect to take a much bigger share of the overall private ecosystem in terms of where, I know you said crowdfunding, I would, I guess, call it private investment platforms play, where crowdfunding is one of the key product offerings. But certainly as we move into kind of Web3 services and in fund services, it will broaden. But also, I fully expect the market to itself grow, and then the question is, with that growth, what's driving that? Mm-hmm. And I think the platforms will do a lot of the heavy lifting on driving that, because it is really only the platforms that have at scale capability to reach broad audiences, to educate broad audiences, to allow a sort of fair participation of broad audiences. So in that sense, I think the market gets bigger and we play a bigger role in it. So we've still got a long way to go before we talk about crowdfunding's leveling off.
Awesome. Well, that is good news. Equity crowdfunding cross-border in Europe got a bit more simple, and Seedrs is a good platform to get started. For transparency reasons, I can also say that EU Startups raised a small round through Seedrs at the end of 2019, and we had a great experience. So we can only recommend it. And well, Jeff, thank you so much for taking the time today. Thank you for all the information, and we will continue to follow the story of Seedrs and of your team.
Thank you, Thomas.
Thank you. Bye.
Bye-bye.